Hello and welcome to my March property market update. From the fascinating skyscrapers of Dubai last week, I've travelled all the way further east to enjoy the amazing spring weather here in Hong Kong. And as I bring you the latest updates about the London property market, I'm joined by my colleague and international director, Widya Lestaluhu. She will take us through the updates from our overseas offices.
Thank you, Mark. It's a joy to have you with us in Hong Kong. And I'm excited to hear about the London property market. It's all set for another spring bounce this year. With higher sales, a £100 billion growth plan, and a booming buyer's market. What do you have for us this month?
Well, yes, I will cover all of those points, but one at a time. So firstly, let's look at the SDLT stamp duty deadline. While it's unlikely that new buyers will beat the SDLT deadline of the 31st of March, they will surely benefit from having the highest property choice in a decade, which has reached its peak since 2015. Despite the prospect of having to pay higher stamp duty, the London property market has shown resilience, as the number of sales agreed is currently 9% higher, while the number of new sellers is 8% more than this time last year. Next, the conveyancing logjam and price rise. Well, the rush to beat the stamp duty deadline has led to a massive conveyancing logjam, as up to 575,000 buyers await their legal completion of their purchase. However, that hasn't dampened growth, as our latest market index revealed a 3% increase, which equates to £9,073 annual increase in the average UK house price, which incidentally is now £302,464, while prices in London average at £581,641. We also recorded a 19% gap between the average asking price and the selling price of a London property. Price increases in March are a long-term trend that signals the start of a spring housing market surge. Turning to mortgage rates and inflation, well, the Bank of England held its base rate of 4.5% at last week's MPC meeting. This decision came in after both the US Fed and China's central bank decided to keep their base rates unchanged. While the US held rates steady at between 4.25 and 4.5%, China had their 5-year loan prime rate held at 3.6%. Inflation in the UK is currently at 3%, which is a lot higher than the 2% target set by the Bank of England. Let me now talk about the £100 billion London Growth Plan 2035. Well, London's Mayor Sadiq Khan recently announced this ambitious decade-long growth plan worth a whopping £100 billion for London, aiming to boost London's productivity the pre-financial crisis era of 2008. The Mayor announced a devolved funding plan. This will include an allocation of over £300 million in central government skills funding to local schemes that will help create more than 150,000 jobs. Londoners can also expect a boost to the city's transport infrastructure, with plans to extend the DLR to Thamesmead in the southeast and extend the Bakerloo Underground line further south to Lewisham. Rental markets in the capital have also performed very well. But before I get to that, I'll let Widya take over and share some exciting updates from our international offices.
Sure, thank you, Mark. Indeed, we've been very busy. Those were really some interesting updates. Our overseas offices have been equally busy, as we've had launches and property showcases this month. Starting with Hong Kong, we had the Darmak Lagoon Showcase here earlier this month, where we presented luxurious waterfront apartments and townhouses near Dubai's Darmak Hills. We then previewed exclusive 5-star residences at Andermatt in the Swiss Alps. Finally, we concluded with a successful exhibition of the London Square collection, where our directors, Marc and Anita, joined us and met with many investors. Our Malaysia office in Kuala Lumpur recently concluded the showcase of Southmere, a new London lakeside development in Thamesmead. With Elizabeth Line connectivity and the proposed DLR extension that Marc mentioned earlier, investors can expect up to 6% yields at this Zone 4 development.
Very good.
In Singapore, Doris and the team showcase London Square's Wandsworth Common, which offers investors the rare chance to buy a house in one of London's safest inner boroughs where only 1% of residential properties are houses. Next, we complete the Golden Triangle by launching 2 new developments in Oxbridge. These include the Icon and Knights Park in Cambridge and Candleside Quarter in Oxford. Access to beautiful English countryside and the world's best universities make these standout investments for growth. Our India office hosted an insightful showcase that combined expert advice from education specialists focusing on property investment to drive ROI, while Soraya and the team in Bangkok showcased lovely waterside apartments at Royal Arsenal Riverside in Woolwich. Our Bangkok team will also showcase a special preview of London Square's latest luxury development in central London this week. So Marc, now that we're done with our overseas updates, why don't you fill us on the rental landscape of London?
Well, thank you very much, Widya. Wow, we're really busy overseas right now. But looking at my favourite topic, the rental market, although growth is slower than a year ago, rents have still grown. Zoopla reported a 3% rise in the UK rents, and London's average rent is now £2,595 per month, which is almost double the national average according to government ONS data. The annual cost of UK rents has increased by £3,000 a year, reaching an average today of £15,400. However, average earnings continue to outperform average rents by 6% annually. Even though the supply-demand constraints have cooled slightly, with 11% more homes available for rent than a year ago, there are still 12 renters chasing every available property. And as a landlord myself, I can vouch that even rental reforms and proposed policy changes will not affect rental market stability, as rents are expected to continue rising by 3 to 4% this year. As a welcome spring bounce in the housing market, now is a good time to invest in a London property, don't you think, Widya?
Absolutely. We are still very invested in London. Marc, despite missing the SDLT deadline, I'm sure there's plenty of new growth opportunities offering good values as well as good yields.
So I do agree with Widya on that point, and as a big thank you, Widya, for joining me today. And as always, if you're looking to buy, sell, let, or even renew your tenancy, please do get in touch. So goodbye from Hong Kong and Widya, and I'll see you next month. Bye.
Bye.